Not only you need to understand how prices move, but more importantly, you need to understand why prices move a certain way that they do. Not that you have this magic formula and prices just bounce off of there. Just like here, this is what should have caught your attention first today. This is mid-morning action S&P 500. And first, as a price action trader, you need to find your trend lines. You need to identify the bias. This is the most important thing when you start trading. You need to identify the current bias so that you get the idea where the market is heading. So you need the trend lines, you need to draw them from the first few swings, just like I did here. And this is what I first saw. I saw that the trend line broke and the prices rallied up to make a new high. This is the rule of the trend lines. After a break of a trend line, the prices will attempt to make a new extreme. So how do you use this information? Well, with a new high in place, you are now thinking that there is time for correction or maybe even a reversal. Unless the prices will stay above the EMA and we may continue higher, then of course you will readjust your judgment and you will continue trading the uptrend. But first, after a new extreme, you always need to be ready for a correction or a reversal. And this is what continue exactly today. You can see prices pull through the EMA, pull back, first entry long. This was the first leg by the bulls, first attempt to enter long. This movement failed and prices broke down even lower. And then we had second entry long, second attempt, market moves in twos. Remember, two-legged pullbacks are real. So this was the first entry long, pullback, second entry long, second attempt by bulls to go higher, and it failed. This alone is a reason for you to take this short, because it is a failed second entry long. You have this correction downtrend working lower, you're waiting for a new extreme, and it is a first entry short, pullback, second entry short. So you have three signals here, telling you that you need to short this. So this was a good first short today. And of course, you had a break of a trend line, you have a new low, and then prices are now starting to go into this small little congestion. The EMA is starting to get very flat. But before that, there was one good trade that you could have taken. When we have a new low in place, I wasn't now thinking, we should make new lows. I was already kind of thinking, okay, this down trend correction played out. But we have a trend line here, we break, new high. I didn't go short here yet, because just like I said, this correction played out. But when we made this trap, this bullish bar, and the EMA held, the EMA serving as a ceiling, and we ticked few ticks higher and instantly shut down, this was a good trap, and this is the better entry to go short. It's not, this is a second entry short here, and you have a break and a new high. So this wasn't a bad entry, but I would still wait because this correction had an already new low. And after that, prices went into the trading range, went into congestion. And what do I always say about congestion? You stay away from this. A lot of beginner traders, they get chopped into pieces trying to trade this. Big bearish bar failed. Big bullish bar failed. They will get chopped into pieces. And of course, the best way to trade small congestions, aka small trading ranges, it's the same way as you trade any trading ranges. You fade the breakouts. And this is what happened here. Look at this. This is a perfect price action. Price action is so, if you learn to read this chart, you just have a gigantic advantage, because this is a first break from this small little congestion. And what did the prices do? The first thing they did, right pullback straight into the small congestion. Quick, easy scalp. Then prices, chopped a little bit higher, and then they completely, the knife fall like through the butter. They completely trapped everybody, and I don't think there's any setup here. I'm not gonna mark this just because hindsight is always 2020. So I'm just not gonna be one of those traders who are just gonna mark any trade because it just looks good. No, there was probably no setup for you. to go short here because this is horrible setup. This is horrible signal bar, and this is a little bit better, but still. So there's just no way to enter this according to price action rules. And yeah, at this point it's clear that we are in a downtrend. Prices are now, the EMA is pointing straight down every time prices touches EMA. The EMA completely, pushes it away further. So, but then again, there are no good setups. There is a second entry short here, horrible setup. You are now very close to these lows, so you want to wait. You want to be smart. You don't want to be going short into this support, and this is what would have happened to you. You would have got bounced. So always remember to draw these shorter term trend lines. And I'm keeping this on purpose up here because at this point I still didn't, I still haven't had my trend line drawn. So I'm gonna show you that just in a minute. So even though there's a second entry short here, the trend line is still in a way, and you must respect it. You must respect these short-term trend lines. So even though there's some support forming, I still don't think there's a good setup to go short here. There, you could make a case for good support here, and this was a big move down. Look how it's chopping lower, but still, I'm not sure about that. At this point, there's a clearly strong resistance holding. Actually, was I saying support here? My bad, I was meaning resistance. There is a strong resistance forming, and once again, you have to draw these short-term trend lines if you want to be successful. If we got a break, attempt to a new high, and prices immediately spike down. So this was a good entry for you. This was a first entry. Notice the new low. Pull back. First entry, first bearish bar. It ticked lower. Went higher, failed because human psychology works this way. That people usually wait. People usually attempt something to do once, and if it fails, they attempt it one more time. So this is why prices always moves in twos. First entry, second entry short. Resistance is clearly strong and holding. And notice how this is perfect example that you need to go with the professional traders. You need to respect the market. You don't argue with the market, because every time bulls came into the market and they tried to push this market higher, they instantly got slapped over their hand. Boom here, boom here, boom here. So you need to, follow what the market is doing. You don't want to argue with the market. And once again, price action rules played out perfectly. Second entry short here, break of a trend line, new high, resistance strong, multiple. This is a very high probability trades. There's a multiple, factors in play. At that point, since we bounced here like that, and I was thinking, okay, yeah, now we're a downtrend. There is no way that bulls, after not pushing it higher that many times, there's no way they have any leverage today. So I kind of just drew this thing from these few swings, and I push it something like, initially I had it a little bit lower here because you can see clearly there's touches here, but I think its actually might be a little bit lower. It kind of fits here too. And then again, once I saw prices stacking up here, I was thinking, okay, now I gotta pay attention. This is what you need to do. You may draw many trend lines during your day, and sometimes prices will shut through and you will delete those trend lines that they are not valid. But once you see prices reacting and kind of stagnating just alongside this trend line, you need to get much more focused and you need to pay attention. And basically, once again, you have to draw your short-term trend lines. This is what I did. Short-term trend lines. You got a break, you got a new high, and it's off this channel line. Prices, it wasn't enough for 10-tick scalp. Prices pull back. You didn't get stopped out because you need to, you need to keep your stop 1 tick above your signal bar, which is perfect here. You didn't get stopped out, and this is perfect setup where you can actually add on. If you're still in this trade, you can add on, because at this point this trend line is clearly confirmed. This resistance is clearly forming, and it is a still big downtrend. So this is a really good setup. This day was actually so good. The price action was so valid today that it actually made me realize how easy it can be once you learn to read the price action. Once you get rid of all the useless indicators and all the crap that those fake gurus teach, prices reading price action is actually not that hard. It's very attainable. It's the emotional part of trading that get people messed up. But yeah, the price is chopped down. Now it is a clear that it is a strong downtrend. You got a first entry short here, pull back with it's still actually first entry because we didn't break higher. So yeah, so this is the first entry. So I don't see good setup. Even though I thought initially this could be second entry, this is still a horrible signal bar. So you don't want to go short here. You need to let this one go. And why do I have this? So many. And once again, this is a big downtrend. You can tell that bulls, they threw in their towel, and you need to treat this. When you see downtrend like this, you kind of can bend the rules just a little bit because you can start to get a little bit aggressive and start to taking less higher probability trades, lower probability trades. Because on a downtrends like this and on uptrends, big uptrends, sometimes you don't even need to wait for a second entry, and sometimes the setup may not be perfect and you still may work. If you're one of those traders who really like to take higher probability trades, I recommend you waiting for it. But you can bend the rules just a little bit. But here we go. Once again, you have to draw your short-term trend lines, not just the big ones. Your short-term trend lines will keep you on the right path. Once again, we are working higher. It's time for bears to take their profits. We're working higher. We break. We get a new high, and we instantly tick. Look at this big bullish bar. We tick one tick higher, and instantly on the one signal bar, this is up down bar, engulfing bar, we instantly turn back down. This is a good trap. This is how you know that everybody is now panicking. A lot of bulls who went long here above this big bullish bar, they're now panicking. They're realizing that they got trapped, and this is what caused this big spike down. So it was a good entry one as well. Once again, prices made a new low. Once again, you need to draw your short-term trend lines. I see a lot of people, and they don't want to draw these trend lines. I coach these. I talk to them every single day. They don't want to draw these short-term trend lines because it's kind of annoying. They just want to focus on these bigger trend lines, because they may catch much more runners. But you need to pay attention even to the shorter term one. They will, if you draw short-term trend lines, you will stay away from a lot of losing trades. If you just let these short-term trend play out, you will stay away from a lot of losing trades. Once again, we're working higher here. You got a break. You got a new high. You could make an argument for going short here. Although this was a little bit, in my opinion, this was a little bit still aggressive. You never know if you're gonna push a little bit higher here. It is a huge downtrend. It is a first break of this gigantic trend line. And once again, the rules of the trend line is after break, prices will attempt a new extreme. This is what's probably gonna happen. Nothing is 100% in trading, but it is probably most likely gonna happen. And as you see, it did. Prices are still working now. And this was I actually forgot to mark this trade right here. So you want to wait here and prices pull back. First entry, pull back. Second entry. At this point, since you got this, double top, triple top, quadruple top, I think you can take a short even here. And once again, prices, try to shake you up. And this is what they try to do. They may try to shake the weak shorts. But once again, if you're a professional price action trader and you keep your stop one tick above your signal bar, you are going to be protected. Price action structure will protect you. So you need to put always your prices above the signal bar. Sometimes, people try to monkey with their stop loss and they put it in the middle. You cannot do that. You always in any circumstance have to put your stop loss above one tick above the signal bar, which was this bar. And this was the second entry long. And the reason why this might seem like a failed second entry long, pullback first entry, second entry, but notice that this is a first bullish bar of this new swing that break higher, but prices didn't break below this. So this is a still part of the first move. So this is a first entry long, excuse me, pullback. Prices broke below this and second entry long here. This kind of two-legged pullback to test this support or resistance. I don't know why I keep mixing these two up today. Pardon me. It's very unprofessional. But yeah, this was a good trade, and you may still have your runner here. But I'm just gonna show you a little bit bigger picture. Just price action was today very clear. I hope you guys are understanding. I hope you guys are studying your charts every day. You will get better at this. But just realize that the short-term trend lines are key now. You know, obviously this big trend line is a key also. But and yeah, this trend line is probably here because look how nice it fits even here. I initially had it like here. Oh yeah, it can be even like here. You know, you don't have to be perfect. Remember, you don't have to be perfect. You always have to be close, though. That's very important. But you can clearly see what kind of an advantage you get if you learn to read price action, or those poor guys who are using indicators and who's using other tools that are incorrect. So hopefully I'm gonna wrap it up. This is a big picture. It is Wednesday today. So yeah guys, wish you a good day. Bye.